Hey everybody, I'm so excited to have a wonderful person that I've known for quite some time in the house today. She is a CPA, she has been so helpful, I've referred her to so many people, and today you are in for a big surprise, a time of fun, and also a very educative and very informational session together. Can we meet you please?
Thank you. My name is Dumkele Anifowoshe. I've worked with DJ for a while, like he has said. I've been a CPA, practicing for close to 2 decades now.
Ooh, 2 decades.
Yes, close to 2 decades. I have some experience with the state. So I've worked on state taxes, did some audit, did a little stint with H&R Block. And before I came to the US, I worked with one of the big 4 accounting firms in Nigeria where I started my tax experience. And then I came to the US and continued with what I already love. Taxes.
First of all, what is tax returns?
Okay.
Let's start from the basics.
The basics.
What is tax returns? What constitutes it? And why do we need to file tax returns?
Awesome. So the US system, they expect for every income you make, the tax system expects that all income is taxable income, except if specifically exempt from taxes. So if you're earning any income, be it income from sweat like wages, your payroll, W-2, or if it's from your business where you're self-employed, or from investments, maybe you're investing in maybe some stocks or your own assets, maybe real estate rentals and stuff. Wherever you're making income, the IRS expects you to file some form of a tax return. Depending on the nature of your income, sometimes you're able to deduct your expenses, so you pay taxes on just your profit. Like I said, it depends on the nature of income. If it's just W-2 where you're employee, that doesn't apply. But if it's a business where you run your business, then you can deduct certain expenses and then pay taxes on just your profit where applicable.
Coming from Nigeria and so many immigrants, filing tax seems like a strange word. For example, in Nigeria, I know that there is tax, but just like people rarely file their taxes because you ask yourself, what would they do with my money? So here in the US too, it is strange. That is part of the culture shock that you have to file a tax. So let's go over some of the misconceptions that people have about filing taxes and all of that.
Now, while we file taxes, you call 911, people respond.
Okay.
That's part of what they use the tax dollars for. The roads, that's part of what they use the tax dollars for. And then also, depending on the income level, some people qualify for things called like earned income credit, depending on how much income you have and the number of dependents, sometimes without dependents, sometimes with. It just depends. But basically, the government use the tax dollars to do so many things. And then sometimes we hear how they give aid to other countries. But basically, they help, they support things within America and then sometimes outside America, but basically to fund the government. And then even things like schools, like things the real estate tax we pay on our homes, those are local taxes. It goes towards funding the schools. Like most of us remember, like back home, most of us went to free schools. We didn't have to pay for schools, you see. So again, some people come here and then some kids go to like private schools where you pay, wonderful. But some also go to like the county schools where they don't have to pay. Some people even qualify for free lunches from the tax dollars. That is where some of these things are funded from.
Okay, so in essence, for you to enjoy all of the benefit in terms of the social amenities and structure, here good road, good healthcare systems, the tax that you pay, all that is the source that the government used for all of those things. Well, we can understand, and that really makes sense. What aspect of the tax returns do mortgage lenders actually check before they will qualify you for a mortgage? And also, what do mortgage lenders count as income? Because that has been a major challenge with so many buyers. They will say, well, I'm making so much money, but then the mortgage lender said, well, based on my tax returns, I'm making so little. Please clarify that for us.
Thank you. That is a very good question. There are different kinds of income. So there's the W-2 income where people are employees. The employer pays you wages maybe every month, every 2 weeks. So you get your W-2. That is almost straightforward because you file your tax return and what you earn, your wages, is reported on the tax return. That's almost, straightforward. Of course, the other things are coming like the itemized deduction or standard deduction. Okay. But the first thing they look at is your income. So like I said, for the wage income, it is straightforward because you're W-2. You can mess with it. Now, where it gets interesting is for people that are self-employed. You own your business. Let's say you make 200,000 in revenue. Okay? So in your opinion, you're doing very well in your business. But remember, when you're self-employed, you can deduct some expenses. So you can write off maybe things like your mileage. You can write off rent you pay for your office. Like all this fantastic equipment you have, you can deduct the cost of your equipment. So when you deduct all that, if it reduces that your 200 to just 10,000, 10,000 is your profit. So 10,000 is your income, not the 200. So when you go to a mortgage lender, when they look at your tax return, they'll say, oh, you brought in 200,000. But then when you took out all your expenses, what you took home was only 10,000 really. So, and for people to lend you money, you have to show that you have the ability to repay the loan. No one wants to loan money to someone who can't pay back. True. So that's what they look at.